Hello, and welcome to this recorded webinar where we will be taking a look at Beyond the Big Box, Spotlighting Small Bay Industrial Trends, a joint report by CompStack and Faropoint. I'm Jacob Thomas, an analyst at CompStack, and I will be the moderator for this webinar. Let's meet our speakers, Shahar Koifman of Faropoint and our very own Ali Bowman.
Thanks, Jacob. So we're Comstack. We are a nationwide provider of lease and sales comps across the United States, as well as property data. I am the senior director of the real estate intelligence team and also work with Jacob. Our team prepares research and content and often works with partners and clients like Faropoint to produce such research, which is why we are here today. And Shahar, would you like to tell us a little bit about yourself and your company?
Yes, of course. So first, thank you for inviting me. So a little bit about Faropoint. We were founded in 2012 as a commercial real estate investment manager. And since 2016, more or less, we are focusing solely on industrial and within it on last mile and urban logistics, where we identified an opportunity, which is something that we will cover. Faropoint is a vertically integrated platform with 7 field offices. And as mentioned, we are a tech-enabled company. We have an R&D department operating for 4 years now. We developed our own pipeline management software and AI models, helping us in pricing and underwriting, which is also what my department within the company does. I am the head of research, so I deal with both classic and AI-driven research.
Terrific. Well, we're excited to be here with you today.
Excellent. Let's get right into it. We'll be talking about the findings from the recent report, giving an overview of those, why focusing on small bay, what is small bay, and what are the market trends in that area, including tenants and key features. We'll talk a little bit about the difference between single and multi-tenant small bay, and take a look at a few key markets for their notable performance. So let's get started.
Great. Thanks, Jacob. And again, thanks for joining us, Shahar. We're excited to be here today to go over some of the key insights from our report, which was released about a month ago on small bay industrial. And I guess, like, first of all, why did we focus on this part of the market? And most importantly, it's because, this is Fairpoint's focus. They're a leader in the field, and we had the great opportunity to work with them to learn a lot more about it. And also because often big box industrial sort of dominates the headlines, but small bay plays a critical role in the industrial market, but it's often overlooked and sort of less studied from a market research perspective. And particularly over the last couple of years, bulk leasing has moderated and more interest has come to small bay. It's shown resilience and renewed investor interest. And so we want to address in the report from a high level, what is it? What's behind the sector? What are the fundamentals? And what could we look to going forward? So first off, some technical details. Part of the most exciting part of any report is defining, what we're looking at, and we wanted to understand, how do people generally think about bulk industrial as compared to small bay industrial? And we discussed with Firepoint, there isn't sort of strict definitions for any of this. It's sort of a little bit up to interpretation, but for the purposes of our report, we define bulk industrial as buildings that are 150,000 square feet or larger, and small bay industrial for buildings that are smaller than 150,000 square feet. And obviously, there's give or take there depending on the market and the segment. And then within that, we wanted to understand how trends for tenants of different sizes within small bay industrial. So we basically focused on tenants smaller than 100,000 square feet, and then within several different categories, those smaller than 25,000 square feet, 25,000 to 50,000 square feet, and then 50 to just under 100,000 square feet. In this report, we also focused across 9 major markets. Some markets that I know Fairpoint works in, and some that they do not. There's several California markets, including the Los Angeles Inland Empire market. We also focused on Chicago, Atlanta, Dallas Fort Worth, the New Jersey market, and then Miami, Fort Lauderdale, in Florida. And then again, as we said, we'll cover a little bit within small bay, like what is the difference between multi-tenant and single tenant. Okay, now that we have that exciting stuff out of the way, the most important part in our report is, what are the rents and why did we focus on small bay? And I guess a big part of the reason is that small bay industrial consistently commands a premium over bulk. So you'll see in the chart on the left that came from our report, the blue column showed the premium per square foot across these nine markets for the average rent for small bay over bulk. And you can see that it's shifted a bit over time. It peaked in this data set in 2019, but it's remained in the double digits, even if it has moderated a bit over the past few years. In addition, another reason that I learned from Faropoint about why investors do like this sector is that the lease terms tend to be shorter. So in contrast to something like the office sector, where longer lease terms are preferable for stability of the building, industrial investors in small bay like that they're shorter lease terms and often shorter than those in bulk industrial, and that allows for more frequent repricing opportunities. And you'll see across the data sets we started multi-tenant small bay actually had the shortest lease terms, followed by single tenant small bay, and then you'll see bulk industrial had significantly longer average lease term lengths. So a large part of what we wanted to understand is, what is this market and how does it differ from bulk industrial? So we took Comstock's data and looked at the top lessees by industry across these three separate categories. And what we found is that in contrast to bulk industrial, it's less concentrated in 3PL logistics, which is where like bulk of the leasing is for bulk industrial. So for small bay, it's much more diverse tenant base, actually higher share in manufacturing, which doesn't necessarily mean heavy manufacturing. It would include things like companies that are servicing cars, automotive related, construction materials, building fixtures, tile companies, all sorts of like different businesses that it's a bit more diverse than bulk industrial. So, Shahara, from your experience at Fairpoint, what else is sort of the key characteristics of small bay in your perspective?
Yeah, so I think some of it has to do with the physical attributes of the buildings that we're dealing with. Obviously, clear heights are going to be slightly lower, and the office ratios are going to be by definition larger, sorry, because the buildings are smaller. But
Hmm.
I think that one of the more interesting aspects, and it ties very nicely to the question of industries and tenant types, is location. Whereas bulk industrial tends to be more in the outskirts of cities, the small bay buildings will be found closer to the centers, and it's actually quite a key attribute which is transcending the geography. It has to do with the fact that the tenants, the type of tenants that we see in our portfolio, are directly tied to the local economy. They have managers living in these locations close to the warehouse. They have their employees working in these locations. And if you look at the mix that we have, for instance, in our portfolio, so the large majority is classic in the sense of warehouse, distribution, light manufacturing. But you do tend to see these differences. For instance, in Chicago, you see more manufacturing, and in Baltimore, you see a bit more government. And in general, you have a wider array of industries in our type of buildings. We have tenants varying from the U.S. Navy to breweries and even a training pool that we have in one of our buildings. So it's really a full reflection of the U.S. Economy.
Yeah, that's interesting. A lot of great points there. And I think the location is, a big part of what you said. What I learned about small bay is that, these are part of the local economy. They're businesses that are servicing, much more closely what is around them. So it's a great point to make. So here in the next part of our report, we got into evaluating the rents within small bay across different categories. So what we learned, well, what I learned is that the rents can differ significantly by the size of the tenant and also whether you're occupying the space by yourself, you're taking the entire building, versus you're sharing it with other tenants. So, in general, single tenant, small bay leases command a higher rent, as we can see in this average across the nine markets. And that was true across these three different tenant size buckets we studied. So that's the line in green. And while we saw that the highest rents in 2025 was for single tenants below 25 than that below 25,000 square feet, excuse me, that's also sort of the bucket where tenants might pay like the lease to be by themselves, so it's of less importance to them. Whereas if you're 25 to 50, 75K and your business requires that you might pay a premium to occupy a building by yourself. So, Shar, can you give us a little bit of like, kind of the industry expert? Why do single tenant users tend to pay a premium, and why does it matter to them?
Yeah, so I think basically it's a question which is kind of some of it is psychological. I mean, all of us would love to live by ourselves. Uh,
Yeah.
we like neighbors, but we can do without them. But I think it has to do more with the functionality of the buildings. So if you have a limited truck court with so and so dock doors, you don't want to split them with other tenants, and you want the flow of trucks into and out of your lot to be as free as possible. So this is a clear advantage for those who are single tenant. Um, I think though, and we will see it, I think, in the next slide, that it's just one consideration in the entire set of considerations that tenants have when they choose a location.
Yeah, no, that makes a lot of sense. So we wanted to dig into this a little bit more in the data, the single tenant premium. So here we have it divided up across all of each of the nine markets that we studied, and also broke it into three kind of key periods. The pre-COVID period being 2015 to 2019, then say, the period of this robust industrial growth that we last saw, that's 2020 to 2022, and then 2023 to 2025, which has been sort of generally a period of more moderation and in some cases softness. So what we saw, we were a little bit surprised to see that in the data that sometimes the single tenant premium goes away by a market or by a period. It doesn't always necessarily hold up in the data when looking at it on a dollar per square foot, comparing two different data sets. So why do you think that we found this, and what are some of the reasons why it might not necessarily show up in traditional market data?
Yeah, so I think first, as you said, I was a bit surprised to see these results. It's always the case for us as research people when theory meets reality. I think one of the possible explanations has to do with locations within markets. So it may be that the specific mix of leases that went into our data prefers a certain location over others, and thus maybe single tenants are less represented properly in what we do have versus what we don't have. So it could be location, it could be the type of buildings in terms of year built, for instance, or other functionality features which make single tenant less attractive as opposed to multi-tenant. Um, Again, it's a theory. We see it in our everyday business, but the data is what it is.
Yeah, and I think we also talked about like the difference in like lease term, and then didn't necessarily control for that. And there's also sort of the issue of like, we weren't necessarily like interviewing a tenant and saying, here's one building, what would you pay to occupy it by yourself versus what would you pay to occupy it with someone else? It's less of like a same store analysis, but it was interesting to see, kind of how the data points differed, across these different markets. So, sort of in looking at all of this, we were interested to break down the small bay industrial into single tenant and multi-tenant. So here we show how single tenant small bay industrial performed against multi-tenant by market and comparing historical growth since 2019 as compared to year-over-year growth, sort of more short-term growth. And what stood out here, and again, we were a little bit surprised to see this, is that there is more markets that had both this strong historical growth, positive historical growth, and positive recent growth for multi-tenant as compared to single tenant. So if you were to look at the chart on the right, which is multi-tenant small bay industrial, you'll see there's more markets in that top right quadrant. But I would say across, nearly every market, there's positive, and in some cases double-digit growth for growth in rental rates since 2019. We show that five markets, Atlanta, Chicago, Greater LA, Northern Central New Jersey, and Dallas Fort Worth, both had positive recent and historical growth for multi-tenant. And the strongest growth was actually in Atlanta, suggesting that might be a market to watch, where you'll see that Inland Empire was sort of had lower growth. That's being a market that's more driven by bulk industrial. So were you surprised again by what we show for multi-tenant or single tenant? And how does Faropoint think about, the difference in performance or advantages and, leasing to single versus multi-tenant in your business?
So first, yes, we were surprised again, but I think almost all of these markets are markets where we're active and we're deploying. I think one of the explanations here is that for us to buy these properties is not necessarily a question of single tenant versus multi-tenant. We have other considerations as well. And we see these markets, all of them as being all in all healthy. I'll take into example Miami, which has featured less positively in this chart. Now I know that some people are talking about a bubble in Miami, but we have seen it performing considerably well in the last few years and set to continue growing. So for us, it's counterintuitive, at least what we see here. Yeah.
Got it. So you see Miami as kind of like an emerging market because of everything that's happened post-COVID, like people moving there, and so now there's sort of like a smaller industrial market emerging to serve that economy, um,
Yeah,
the
I think
population growth and such.
sure, sure. I think Miami specifically has land constraints, supply constraints that make it a very attractive market for industrial investors, and I don't think that is going to change in the next few years. Um, yeah.
Great, makes a lot of sense.
Yeah, thanks, Ali. Thanks, Shahar. It certainly is a lot to think about. I want to turn back to Shahar for a moment and get Faropoint to weigh in on, with all of these considerations to think about why do you choose to focus on Small Bay, and what is your overall level of confidence in the market right now, especially the recent economic headwinds that have started to emerge.
Yeah, so first, I think that the findings that we saw so far make the viewers understand why this asset class is attractive. It is growing. It is growing rapidly. It is pretty resilient to your point about changes. Um, I think that even in a time of economic uncertainties, this type of buildings is going to be in high demand because, um, as I said before, they are a true reflection of the economy at large. So people want to have this type of buildings to support their businesses, and they want to be in this type of locations. And that is not going to change considerably. It's going to also grow in the next few years. Um, so I think the fundamentals of our business are pretty strong. And even if there was a softness in leasing, we felt it less than in bulk industrial in the last year, and I think that it is probably going to continue this way. But I think that for Faropoint, it's not only the fundamentals. There's also a business strategy that transcends the actual fundamentals. The fact is that Small Bay is very decentralized, and it is sort of a market that requires expertise, and that we have developed this expertise. It's not like underwriting cookie cutters and big buildings that have the same attributes. You need to understand the specific locations, the specific type of functionality of the building, and our investment professionals develop this capability. And furthermore, I think that since we are a pure play small bay, we create efficiencies in the sense that we created a relationship with brokers, and that helps us source deals where others struggle to find them. Our type of strategy is buying a lot of small deals and aggregating them, and I think that that creates value to our investors.
Interesting. Thank you, Shahar. It certainly sounds like there are still a lot of opportunity in this slice of the industrial sector.
Thanks for sharing all your industry secrets.
So now I'd like to turn to the Q&A session, and we received a lot of questions about the report, so we'd like to get into a few of them now. So here's some of the questions we received in our inbox for this webinar. How is the new development market for Small Bay? Allie, you want to take this one?
Yeah, I can give a little bit of insight and then love to hear from Shahar about this. Um, so, we don't necessarily track sort of construction pipelines, but from what I know, most of the new development through the last cycle has been focused on, bigger buildings, bulk industrial. For a lot of reasons, that's where the zoning is, and that's where the land is, and investor interest. So, in general, and our data shows this, if you take sort of the average built year of the properties in our platform for bulk, it's significantly newer at an average of 2006, whereas for small bay, no matter how you slice it across just smaller buildings or smaller buildings with smaller leases, it's significantly older, by 10 to 15 years. So I am not sure if that is, an impediment to small bay industrial, but I know, Shar, we've talked about how, that's a function of location. It's harder to find places to build new, smaller buildings. What other experience does your company have with, thinking about new development and the advantages or disadvantages of newer buildings?
Well, first, absolutely, this is the picture that we're seeing as well from our sources and from our experience. Um, I think that we see about 1% annual growth of inventory for our asset class as opposed to three times that amount in bulk.
Oh, wow.
Yeah, that's a considerable difference. For us, there is an advantage in limited supply. It insulates us from changes in the market and guards the pricing range for our type of asset class. But I think, to your point about development, it's true that it's very hard to create new development in the right type of locations and make it pencil in terms of affordability. I think that one of our advantages, and I was talking about it just a minute ago, is the ability to source these opportunities. And we actually have gotten into development catered to small bay industrial, and we have a few projects up and running. They're not significant yet. It's about 5% of our business, but we're trying to create this opportunity for the next generation of tenants.
Got it. Thanks for explaining.
Interesting. All right. So, yeah, let's move on. Our next question has to do with tariffs. There's been a lot of tariff talk lately. And so I just want to get you guys' take here. How are the U.S. tariffs impacting the demand for industrial properties? What do you think, Allie?
Yeah, I mean, obviously this is a really good question, but a really broad one, and probably going to do an entire webinar and more just on this. I think from what we've heard and been seeing, the biggest thing is it's causing uncertainty across lots of different businesses, but for industrial users in particular. And I think we've heard stories about some users pulling back on decisions while others feel less impacted from it. I think we've heard that it will most likely impact port markets more so than other types of industrial. Jacob, you and I track the TEU volume at major U.S. ports, and year to date, um, you know basically most of the major ports had a smaller growth than they did from this past year to 25 as they did in the prior year. There hasn't been a complete collapse yet, and part of that is, trying to import goods ahead of, changing tariff policy. But I think going forward, it's pretty accepted that, West Coast ports might show more declines than East Coast ports. Um, and, imports from China have been falling to their lowest level since, COVID. So these are all things that to some extent are still a little bit in flux. But then going back to what I said about uncertainty, our data, we do track concessions for industrial, and you can see here the free rent ratio of term has been going up, though not to a dramatic level, but it has been increasing for small bay as well as bulk. That's been happening before tariffs were even announced, but that may be impacting and continuing that trend in 2025 from what we've seen in our data. Shahar, do you have any insight into how tariffs might be a concern for small bay, or more so than bulk, or less so? Any opinions there?
Yeah, so I think first the keyword, as you said, is uncertainty, and it affects everybody, all business owners, including our tenants. I think while some of our tenants are definitely going to take some hit out of the changing conditions, I think that in general we expect to see less of an effect because most of our tenants, as I said before, are at the end of the supply chain. They are either in the service or they are the last link to receive the goods that are necessary for home customers. So I think their position is, broadly speaking, more resilient to this type of pressures. And moreover, I have to say, this uncertainty and the fact that tenants are postponing their decisions is working in both ways for us as owners, because some wanted to expand and they won't, but some will renew their leases with us and lock in their lease terms, and for us it also can help occupancy, not only reduce it.
Yeah, that's true. It depends on whose position you're looking from, landlord or tenant. If you're deciding to stay and not move, to sort of lock in what you have today, that could be, a good thing for landlords. That's a great point.
Interesting. All right, so in the interest of time, we have enough left over for one more question. Let's see. Here's a good one. Are there any emerging or under the radar markets that show strong potential for shallow bay and small bay industrial users? What do you think, Allie?
Yeah, so we always tend to get questions like this when we have webinars. What is the market that I should be investing in? What is like the top market? And of course, there's many ways to look at that. We had a few interesting markets that showed up in the context of this report, specifically Atlanta. Um, But we can use Comstac's data at a high level to look at leases or the rents that are in place in all buildings under 150,000 square feet, defining a small bay. We have market rent estimates that show, what we think those buildings should rent for today and compare that to what is the actual rent being paid by tenants that are had inactive leases in those buildings today and sort of compare the spread. So that's what you see in this chart. That is what is reflected in blue. And so if you look at that, we found some of the biggest spreads are Atlanta, Dallas, Fort Worth, Houston, Miami, Phoenix, and then also the Philadelphia market, which all exceed or are close to like what the national average is. Um, and again, Shahar has promised to give us all his industry secrets. So I guess, do you agree with these markets? Or are there any markets you're feeling like are better than others at this point in time?
Yeah, the secret is that there is no under the radar. Uh, but honestly, I think you can, if you want to know what Faropoint thinks about markets, you can just look at our investment decisions. I think a lot of these markets featured here are ones where we're active in, so you can say we definitely agree on that. I can give one example of a market that doesn't appear here and we're active in, Jacksonville, Florida. We're doing both acquisitions there. We bought a few buildings in the beginning of this year. We're doing a development project. We spoke about development earlier, so we're doing a project there. So I think you can understand that we see this market as being strong and growing. Yeah, so definitely.
Perfect, thanks.
All right. Well, thank you, Allie. Thank you, Shahar, for taking us through that deep dive into small bay industrial. We want to thank everyone else for joining us for this webinar. Here's our contact information, and we would love to hear from you. So please use the URL on the screen and reach out. Thanks again.